Hello and welcome to another update video on the Hang Seng Index Futures here on the Asia channel. By the way, let me know which other asset classes or indices or stocks from the Asian markets you would like to see. We obviously started already here in the first week with some, but your suggestions are very welcome, so let us know in the comments section. I think it's important to stay up to date with the Hang Seng Index. We have seen a bit of a dip this week, but overall, since we started to cover the Hang Seng Index here on this channel, we started to see some upside, then a dip into this week's low. Now, it's important to understand that we are likely in the late stages of this D-wave rally here. I explained the Hang Seng Index in detail in previous updates. Also, I explained the weekly chart. So I just want to briefly show you, for anybody who's new, that I treat this at the moment primarily as a triangle pattern in a wave 4. And we are likely in the late stages of a D wave of that triangle. A triangle pattern from an Elliott wave point of view is a so-called ABCDE pattern. That D wave might be in the very late stages, and consist of an ABC structure. I mean, that's a rule, that's a corrective pattern. So it can be an ABC, that's the most frequently adopted, most frequently used pattern by the markets in such a D wave. And the D wave itself is an ABC, and the C wave itself seems to be an ending diagonal pattern in 5 waves. So that's what we're tracking, and we've already reached resistance between 27,295 and 30,348. And the thing is, once we see a micro 5-wave move down and a break below the October lows, it could mark the beginning of that E wave to the downside. I have added here a standard support zone for the E wave. That's not really a target yet. It's only a standard support zone. Once we have enough structure here to the downside, we can add some measured move targets, which would then be a bit more precise, but we can use these here as well, between 16,535 to 21,427, as let's say the first kind of area for orientation. Basically, most of that rally is likely done, and we're waiting for signals of a top. I would slightly prefer still another push higher on the smaller time frame. As you can see here, it would look ideal if we start to go higher from here, push a little bit higher to complete this D wave, maybe to reach this yellow trend line roughly around 28,450, but we should be in the late stages of that rally, and we already see some deep pullbacks, which means this rally here, which started in April, the selling pressure is coming in. Now, I can treat this move up internally, the so-called C wave move up in the internal structure here from the June low, as a 5-wave move up as well, an ending diagonal pattern. I explained that in previous updates, where we're now in a 5th wave, which is an ABC structure, so we might still grind a little higher over the coming sessions. Important for me that we're holding above the red line there, 24,723. and 24,240. We are now at a point where we could get rejected because the market has reached resistance, Fibonacci resistance, specifically here, the 61.8 Fibonacci retracement, a very strong resistance level, and that's at 26,488. Now, we could just be in a range still between micro support levels and resistances. But I can tell you, if we now see a break already below the October lows, that would be a first indication that we're moving down in a C wave and that we have started a larger decline already. I explained, because we are so late in this rally, so in the late stages, it's entirely possible that we form a substantial top very, very soon, or have topped already. That would require some evidence, and the initial target area for orange wave C is between 22,878 and 24,264, and this orange scenario shows you roughly how the beginning of that larger correction could unfold as a combination of ABC patterns. But we're ranging for now, slightly higher highs, higher lows. If we can find support in this particular region here over the coming sessions, and I give you a new micro support area for it based on the latest high that formed this week, then there's still a chance for higher. I'm fairly neutral. I would slightly prefer another high, but basically not needed to complete the structure or to keep the structure valid. So yeah, micro support is aligned with the lower boundary line of that wedge pattern here at 25,336. So this is the area to watch in the coming weeks between 25,336 and 26,032. That's the update. Hope you enjoyed the update. Thanks so much. Make sure you subscribe. Bye-bye.